Thank you, Andrew. I thought it might be helpful just to very quickly explain the JOLCO because it's a relatively new structure in the maritime space, although it's been around for a long time already within the aviation space, and it's also been utilized in container boxes. So I'll just briefly talk about what a JOLCO is, and then the advantages of a JOLCO for the players within the structure, and what a typical JOLCO structure looks like in a diagrammatic form. So what is a JOLCO? A JOLCO, it stands for Japanese Operating Lease with a Call Option. In layman terms, it's just a sale and leaseback of an asset, in this case a vessel, to a Japanese borrower, which is generally funded by bank debt and partly funded by Japanese equity. At the end of the charter term, the charterer has the option to purchase the asset, and option is put in quotation marks because there's always an expectation that the vessel will be acquired, and typically it's a gentleman's honor that the vessel will be acquired at the end of the charter period. The senior debt is provided by Japanese banks or foreign banks lending through a Tokyo office or through an office that receives interest-free payments of the Japanese, free of Japanese withholding tax, without which there will be withholding tax on interest payments. So what are the benefits of a JOLCO for the various players? There will be a charterer, which is typically your ship owner. The benefit to the charterer is you can get 100% funding. As mentioned, part of it will come from Japanese equity provider and the remainder from the banks. The funding is also cheaper because it's a blended funding, blended in the sense that the Japanese equity providers' funding rate is lower, and then combined with a normal traditional bank debt. To the Japanese equity providers, which consists of small to medium enterprises with very, very profitable businesses, there is a benefit in terms of depreciation allowances, which they can set off against their taxable income, that in that fashion they defer taxes till a later date. It also allows them a relatively low cash return at the very end of the deal. For the debt funding by the banks, the benefits to those lenders, it's a structure that's proven, as mentioned before. It's been used and tried and tested in the aviation space for many decades, and then used in the intermodal space because it's been applied to assets with a very strong residual value risk, and then lately in the maritime business to very credit-worthy ship owners. It is also a very stable structure for the lenders because there is reduced prepayment risk. Within the JOLCO structure, there's no, technically there's no prepayment, but there's very limited early call options. And of course, because of the 100% funding, it gives the lenders access to new clients which they may otherwise not be able to access. Finally, just to talk through the structure, I won't go through it in great detail, but you can see on the right-hand side the equity investors, which are the Japanese equity investors previously described, which are the small to medium enterprises. They will then form a company, which is the borrower, which is the Japanese owner. In the maritime space, there will be an additional company created by the Japanese equity providers, which you don't find normally in aviation and in containers, and that's the registered owner. The reason being, in the JOLCO, the borrower has to be a Japanese company. But in maritime, Japanese companies can't own, for instance, a Hong Kong ship or a Singapore ship because it has to be a Hong Kong company, a Singapore company. So the ownership is split in the maritime space. Then after purchasing the ship, it will be chartered to the ship owner. The ship owner will provide security, including guarantee, assignment of earnings, etc., to the Japanese borrower. And the Japanese borrower will then borrow the balance of what is not provided by the equity providers from the lenders, and they will on-assign the security to the lenders. I won't take any questions at this juncture, but I'll defer that to after our panel discussion. And with that, I'll commence. So you can see from the structure described, it's actually 100% funding. However, in April this year, there's been a change of tax laws in Japan. And I'm going to address this question to Mr. Ding because I would like him to perhaps describe to us what those change of tax laws were in Japan and how that's affecting the JOLCO structure, because it does affect the new building JOLCO structures and the funding ability. So if you don't mind, Mr. Ding.
Yeah, sure. I mean, a quick one. Thank you, Madeline, for the introduction, and thanks, Marine, Kevin, and Ju for the kind invitation, and my fellow panelists to join the panel. Quick one on the company. APG AIM is a global financial services company with a focus on asset-based finance. Since 2012, FPG AIM has arranged over 18 billion worth of JOLCO, in dollar terms, worth of JOLCO globally. And 13 out of that 18 is actually in shipping, vessels, and container box. And for this Greater China region, actually it is a very important market for us. Over 5 billion out of that 18 billion, so about 30% is for the counterparty here in Greater China area. So with that background, now coming back to the question, now we have this recent tax law change effectively in 1st of April 2023. Also people asking about it. There could be a very long discussion or explanation, but long story short, basically, in the past, or as always been, JOLCO can be applied to the vessels, the container box, and the aircraft. But among all different type of assets, the new build vessels with the special depreciations is the most attractive asset type for the Japanese investors. So this is the basis. And before the tax law change, any shipyards in all countries outside of Japan or inside of Japan, including China, Korea yards, and any ship owners, JOLCO tax investor ship owners, or a real owner, operator ship owners, all of them, all of the yards can enjoy the special depreciation of the new build vessels. But that is before the tax law change. After the tax law change, so you have two, you have a lot of details, but basically on the two extreme spectrum. On the most easy spectrum is the Japanese owner operator. Their core business is shipping. And if they order the vessel in the Japanese shipyard, then 99% of the chance that they can get the special depreciation still. But now the change is really for the other spectrum of the ship owner, which is, let's say, financial or passive ship owner like JOLCO investors, and they place the order outside of Japan, Chinese yard, Korean yards. It will be quite challenging, as we understand, according to the Japanese law and the regulation published, that it will be quite challenging for them to get the special depreciations. But there is also a misconception on this point, is that it doesn't mean if a project or vessel doesn't have the special depreciation, it doesn't mean that it cannot do JOLCO. The project can still do JOLCO. However, it is without the special depreciation, so the attractiveness of that project to the tax investors will be less. And also the overall financing ratio towards the JOLCO user, the shipping companies, the leasing companies, the overall financing ratio is not as high, let's say up to 100% in the past. It could be 80 to 95%, depends on how high is the bank leverage. So, sorry, it's a long story, but I hope that answers the question.
Yes, thank you. Can you just maybe elaborate a little bit about why only the Japanese yards can have the special depreciation, so the audience understands a little bit about the parameters and the criteria of that?
Yeah, sure. So I have to say the law is quite recently being implemented, and there is still different people interpreting the law or regulation or application differently. But on a very high level, the tax authority is trying to say that if you want to qualify for special depreciation going forward, your two elements, your vessel has to be qualified as an advanced vessel. This is English translation of Japanese, number one. Number two is that the shipyard should be considered qualified by the ministry, MLIT, like Ministry of Land, Infrastructure, Transport, Tourism. So two elements, one is on the vessel, the other is on the shipyard. On the advanced vessel, it is quite doable for foreign yards. If you want to have a dual fuel, you have a higher technology for the vessels, most likely you can get away with it or meet the criteria. But on the second point, on the shipyard, the tax law change is trying to say that the yard has to be considered compliant with the, let's say, Japanese law and regulation on the health, the environmental impact when building the vessel, as well as the safety, health of the workers, of the general public when building the vessels. So with that criteria and with the application approval process required to approve the yard or get the yard recognized, the market participants generally, including us, expect that the Japanese shipyard is most likely qualified, whereby the foreign yards is much less likely.
Yeah, thank you. And just to clarify, even though for new buildings that the 100% funding, unless with Japanese yard or those yards that fall within the criteria, won't be 100% anymore. For second-hand ships, age around 4 or 5 years to 8 years, the 100% funding is still applicable, but you don't have the special depreciation. Yeah.
Yeah, that's correct. Because in the past, the second-hand vessel was not relying on the special depreciation to do the JOLCO, so nothing changed there. Only change is related to the new build vessel.
Yeah, thank you. And perhaps, Mr. He, you can, as a ship owner, because you're also a lessor ship owner, do you think this new structure will affect your outlook on JOLCOs, and do you think that maybe Chinese lessors will still be interested in utilizing this tool? Because I know previously you have been involved in a JOLCO as a Chinese lessor in a different lessor company. So maybe you can talk a little bit about that.
Well, thanks, Madeline, and also thanks to Marimani for this speaking opportunity on the stage. Yes. So maybe first a few words about our company, Taiping and Sinopec Financial Leasing. We are a jointly owned company owned by China Taiping Insurance Group and Sinopec Group. We have been engaged in shipping business for over 5 years, and we are not positioning ourselves as only a tonnage provider for our shareholder Sinopec, but also we are open to the international shipping markets. Currently, we have a diversified fleet of around 20 vessels, vessel type including LNG carriers, VLECs, drilling rigs, container carriers, bulkers as well. So along with the rapid business growth of our company, we are gradually accessing the international capital market. And yes, JOLCO is definitely an option for us to arrange financing for our shipping assets, as well as aviation assets as well. I think JOLCO, I won't put more words on JOLCO's benefits because just like Madeline has just introduced. So the optimized interest rate, optimized financial cost, and for us, 100% or nearly 100% leverage financing as well. There are multiple benefits of JOLCO for us. I think we are definitely considering JOLCO in the near future as a financial solution.
And do you think there are challenges, or can you envisage any challenges as a lessor interested in the JOLCO structure? Because it is a slightly more complicated structure.
Thanks, Madeline. I think there are some challenges for adopting JOLCO for our company, because we all know that some of our peers, they have set up offshore ship owning platforms, and they can utilize their Hong Kong or Singapore SPVs to do JOLCO financing. But for us, currently we are establishing our ship owning entities onshore, and when you're considering the full picture of JOLCO and cross-border leasing, like our company, there are two layers of lease. So the first layer from Japanese SPV to our SPV onshore, and the underlying lease is from our SPV to our clients. It's just like a lease-in, lease-out structure. Considering this structure, I think there are some challenges. The first one, we should do some pre-communication with the local governments, regulators, to gain their support for us to do this innovative structure for our onshore SPVs. And it's very good to know that some players of the JOLCO market has already did a constructive conversation with some local governments. Like FPG has already had some conversation with Tianjin local governments and the regulators. And that's the first point. The second point is that because JOLCO is a more complicated structure than plain vanilla financing for our assets, so sometimes we should engage different functions of our company to understand this structure, including like a JOLCO function, like accounting and the risk management and asset management. But I don't, despite these challenges, I think along with our business growth, and we are more open to international capital market. I think JOLCO, we won't wait too long for engage a JOLCO structure for our onshore SPVs.
Thank you.
Thanks.
And Mr. Ma, I mean, we've had the pleasure of working with SINOSURE and
Thank
with
you.
FPG on the C-SPAN JOLCOs, which both the deals, one with HSBC Citibank for 18 C-SPAN ships, and we won an award, thank you Marine Money. And then another time with the BNPP team, also FPG and C-SPAN and SINOSURE for 15 ships. So again, we won an award, and thank you again Marine Money. So it can be seen that you've had great support because it was an innovative structure, the first time that SINOSURE married the JOLCO for such a large fleet. You show a lot of support for the structure, which is very notable. Do you think that you have continued appetite for this JOLCO structure, even though it was quite challenging for SINOSURE?
Yes, thank you, Madeline. And I think it's a good question. And the appetite, I think someone have big appetite but a small stomach, and while the others have big stomach but little appetite. So first, please let me express my deep appreciation to Marine Money to invite me to have this chance to on the stage. And in my memory, SINOSURE has received 3 Marine Money Deal of the Year award, and 2 of them are related to the ECA plus JOLCO structure, and the recognition shows that the market's acceptance. And so, in my opinion, since 2014, the SINOSURE has been the world's largest ECA with the scale of underwriting scale. And also, China is the biggest shipbuilding country and ship owner country. And in other hand, the SINOSURE's shipping finance scale is not ranked #1 in the world. So I think we have willing and we have the ability to continue promote this model. So we have big appetite and big stomach.
Thank you. Can I say, though, that SINOSURE did find it a little challenging given the structure, and maybe you can describe a little bit about what posed as problems, and maybe Mr. Ding can help also because we were involved in that, to elaborate a little bit so people have an idea of what exactly are the challenges that was met but overcome in the end, of course.
Yes, it's really difficult because as an official export credit agency, the innovation is not a straightforward task in SINOSURE. And the rapid innovation is even more challenging because in that time, SINOSURE and K-SURE are both pushing this deal for the same ship owner. So we want to be the we run faster. We want to be the world first deal. So it's very challenging because we make the innovation very effectively. This structure contains 2 substructures, and the EC and the JOLCO. So it's involved in many legal documents, and the requirements we have to meet the requirements from different country and region. So it's the SINOSURE and the LPG and the Farley and banks and the ship owner. We put a lot of time. We are engaging in extensive negotiation coordination, but ultimately and fortunately we make the deal. Yes.
Definitely subscribe or agree with that. I mean, just a quick one. I mean, the deal is now looking back, it looks like smooth, but definitely because it's the first time ever, like Madeline mentioned, it's to combine JOLCO plus ECA structure globally, first time in shipping. Because for our organization, we have done JOLCO plus ECA in aviation, and also JOLCO plus WETC in the United States for aviation, but for ECA in shipping, first time for us and for the market. And also it's a multiple parties transactions. So you got the client in the Canada, you got the banks, big syndication of banks, and you got the government-related entity policy, SINOSURE, K-SURE kicks in. So, and you got the Japanese SPVs, those kind of considerations. So a lot of challenges, but we have the honor to work with people like Mr. Ma, especially SINOSURE Jiangsu branch, working very closely with the headquarters, which we very much appreciated and honor and fortunate. Yeah. Thank you.
And I think Mr. He has a question for you, Mr. Ding, about how do you think the Japanese equity providers will view Chinese lessors in the JOLCO structure? Because that's a different and unique proposition.
Did you ask that question already?
No.
Yeah,
so, in the heart.
Yeah, in the heart, okay. I mean, just now I mentioned that we have over $5 billion USD of transaction here in Greater China out of 18 billion, about 30%. So definitely it is important market, and a lot of those big portion of that 5 billion is with Chinese lessors. And especially during the pandemic years, you have the aviation market down. You got airlines going bankrupt, and you see some of the JOLCO money on the airlines. The investor lose their money, equity wipe out. But we are very fortunate to say that those deals that we have done with Chinese lessors, not a single company, a single Chinese lessors, ask us for like rescheduling or restructuring, because they are not pure aviation or shipping players. They are diversified lessors, and they have strong liquidity support from their parent, either the banks or big corporate. So I have to say that I think the bank partners in our deals also agree that the Chinese lessor, because of their strong credit, they are definitely continue to be a target group for our JOLCO product, at least for us.
Thank you. So before I wrap up, I just want to say that I guess each of us have done quite a few JOLCOs, and we have the experience, and we'd be happy to take questions if there are any. And it'll be good if we can do another award-winning deal, but we can combine everybody in this panel. So we've done JOLCO with ECA, but maybe we can do JOLCO, ECA, and Chinese lessors all in one. So that would be the next challenge.
Yeah. I'm not too sure whether it's realistic, but definitely it will be good to have. Yeah. Very nice to have. Yeah.
Thank you.
Thank you.
Thank you.
Thanks.